Hey, all you traders and investors, it's Blake with Boost Portfolio recording on Thursday, August 10th, and the market is getting ready to close. Just wanted to get this quick video out, let you guys know what I see happening in the market. In this video, we're going to talk about the major market sectors, and let's get right into it. So we have the SPY pulled up here on a daily chart. As you guys can see, the MACD is crossing lower, and we are looking like we want to close below this longer term trend line, which has pretty much been in effect since November of last year. So we've held this trend line since then for the most part, and now we're right at that trend line looking like we want to cross lower. We have the MACD moving lower. What I can say right now is we are losing the trend, so this is a risk off mode. You can also tell we do have volume kicking up on these days that are these sell days. We talked about this in the last video, more volume even today, and it is a sell day as well. So be careful. You can see on, Tuesday we had a new all-time high on Tuesday, and we just kind of sold off all day long. And then today, obviously, we have the news with North Korea. Who knows how that will work out? All I care about is price action. And right now we're breaking below this trend line. So that's an indicator that the trend is changing. Now, if you're a longer term investor, I don't think this is anything significant that you really have to worry about. More if you're a tactical trader, somebody who is more of a position trader, this might be a signal that we could see some lower prices. Now let's take a look at the technology sector, the QQQ. Whoops, sorry about that. 3Qs. Now the technology sector, I mentioned this trend line last week, and if we broke below it, I would be very cautious with stocks within the technology sector. That includes Amazon, Apple, Facebook, Netflix, your typical FANG stocks, Priceline. All these types of stocks have had an amazing run up. And just like I mentioned last week, you can tell it looks like we're getting some distribution around these all-time highs, which really isn't necessarily a good signal. You can see, and what I mean by that is there's a lot of shares exchanging hands when we have these sell days, meaning that there's a lot of volume that's trying to get out of the market. Again, a big sell day, lots of volume, also more volume coming in, red candles volume, big red candle volume, and even today a big red candle, and we're getting volume as well, with the MACD sloping lower, indicating that the trend is changing. We've been in an amazing uptrend since the start of the year. I feel like investors are a little hesitant of allocating new risk in the current environment, especially after we've had this amazing run, more of a risk off phase in that aspect. So be careful. I wouldn't really want to add any new trades right here. You can try to buy the dip. A lot of times you get chopped up, and sometimes it works out for you, but it doesn't really fit my trading style. I like to trade with the general direction and flow of the market. Keeps things simple for me, and right now that trend is changing. Now, that's not to say that we can't have a reflex rally tomorrow and snap back. If you pull up at a 50-day moving average, you'll see that the SPY is pretty much just breaking below that 50-day moving average, which, as long as it holds, it could be a potential buying opportunity. But for now, the trend is to the downside. One of the things I want to look at too is the bonds. The bonds kind of caught a bid today. But like I said, bonds have been choppy, but it is something you need to watch. The MACD is crossing higher, and we are back above this trend line with the 10 and the 20 MAs moving higher. I do like the bonds, potentially for a trade. Could potentially get up to this 130 area. You can see we have this gap that needs to be filled, in my opinion. If we can get back up to this 130 area, I think this could be a good entry today. So keep an eye on the bonds. And also one more thing was gold, safety trade. If we zoom out, you can see gold is breaking out of this this wedge that we've been in for a long time, actually. Since end of 2015 was really the start of this wedge, the bottom portion of this wedge, and we're just starting to break out above this. Now we could either fail here and come right back down, or from here it's a breakout and we move higher and potentially come back to test this 130, 132 area. Now you got to keep an eye on this trend line and also the MACD. The MACD looks really good on a weekly time frame, and also on the daily time frame it's opening back up and it's above this trend line. We did gap higher today, and we did gap higher the day before. Don't be surprised if we come back and try to fill these gaps and make one more run before we ultimately break higher, especially if tensions continue to increase at a geopolitical scale. So real quick, let's just wrap it back up. We have the SPY. Trend is changing. Don't be surprised if we have a reflex rally tomorrow. Overall, the higher time frame trend is intact, but if you're a tactical trader, short-term investor, this might be a signal for you to say, hey, this trend is changing. Might be some time to take some risk off since we've had this awesome run pretty much since November of last year. Well, that's all I have for you guys today. Make sure you check out the website, boostportfolio.com. 2-week free trial memberships. We have incredible service for an affordable price. Love if you guys come and check it out. And hope you guys enjoyed this. I'll see you next time.